Okay, welcome everyone. I'm really excited to be part of this webinar today. There's quite a few attendees here. Singapore is a super exciting market right now. It's super exciting for the crypto industry and, well, as also the more traditional financial industry, which is joining in as well and working with crypto and blockchain. Yeah, I'd like to hand it over to Ian from Merkle Science, who's going to be moderating this panel today.
All right, thank you, Pelle, for the kind introduction. And thank you to all my fellow panelists and members of the audience for joining us today as we delve into the latest in Singapore's regulatory landscape for crypto companies. Now, as a way of introduction, my name is Ian, and I will be the moderator for today's panel. A little bit of background about myself. I'm currently part of the founding team of Merkle Science, a Singapore headquartered company that specializes in blockchain transaction monitoring and forensics. Or in other words, we work with private and public sector clients to build anti-money laundering software to help companies comply with their regulations. Prior to joining Merkle Science, I had the opportunity to practice as a capital markets lawyer here in Singapore, and so I'm no stranger to our legal system. Now, in today's webinar, we will be covering topics such as the impact of the Payment Services Act, or the short PS Act, has had on the ecosystem, issues around implementation of the travel rule, and how companies can leverage on compliance as a growth opportunity. Now, unfortunately, due to some personal issues, one of our panelists, Dominic, had to drop out at the last minute. But looking at the experience of our distinguished panelists, I have no doubt that the quality of discussions today will by no means be impacted. Now, as a note, during the discussion, if any of the audience has any questions for the panelists, do feel free to post them inside the Zoom chat, and I reserve some time at the end of the session to go through those questions, right? So please don't worry if the panelist doesn't address your question at the point of you asking it, right? Because we will have time at the end for it. Now, without further ado, what I'd like to do first is to invite each one of the panelists to do a short introduction about themselves, the company they work with, before we start diving into today's discussion. So perhaps, Julia, would you like to kick things off?
Okay, thanks, Ian. So hi, everyone. I'm Julia. I'm a managing consultant at JFourth Solutions that specializes in financial crime risk management advisory services. And prior to JFourth Solutions, I have had over 25 years of experience in the banking environment, and especially in the area of policy implementation. And we focus on client due diligence and operational risk management. And I'm a working member of the Global Digital Finance KYC AML Working Group, GDF for short, which we will touch a little bit more later in the session. Over to you, Ian.
Great, and with that, perhaps we can have Aymeric next to introduce themselves.
Thanks, Ian, for having me in the panel today. I'm Aymeric. I am heading StraitsX, which is the blockchain arm of Xfers. Xfers is primarily a payment company, and StraitsX specifically is enabling payments for the digital asset space in Singapore. We have three key products: the Xfers wallet, Xfers Direct, which is a B2B solution, and XSGD, which is the first regulated Singapore dollar-backed stablecoin. With these three products, we provide payment services in Singapore dollar to 12 crypto platforms as we speak. And we are currently growing our services as more companies are actually joining Singapore to operate their businesses in APAC, which is one of the exciting developments we've seen in the past 12 or 18 months. And so I think specifically for this panel, our interest in crypto regulatory compliance has been in assessing the procedures and the fraud controls that our customers have on their end. As a regulated company, we have to be accountable to the MAS and to our banking partners, and also from the perspective of a stablecoin issuer. So we've released the XSGD in October of 2020. And so as a token issuer, there are also certain aspects of regulatory compliance, such as the travel rule that we are very interested in and that affect us as well.
Thank you, Aymeric. Yes, the XSGD, for those of you who didn't catch that, is the Singapore stablecoin. It is the first stablecoin over here, and it's gaining a lot of traction among the local exchanges as, you know, an alternative to your USDT or TUSD. And last but not least, I'd like to invite Pelle from Notabene to the introduction. Although, you know, as co-host of the event, everybody probably knows him, but you know, perhaps you can just do a brief introduction still.
Yeah, sure. Thanks, Ian. Yeah, my name is Pelle Braendgaard. It's a very complicated surname, I know, but I am the CEO of Notabene and co-founder of Notabene. We are a fairly new company, but we've been making a lot of progress, particularly in the Singaporean market. We are focused on initially travel rules, solving the travel rule. We have a full stack solution that offers a complete compliance platform for managing the travel rule for crypto businesses. And we have quite a few customers in Singapore already. And I'm happy to say that there's also quite a few real production transaction volume flowing through our network right now. So there's actually lots of real volume happening in Singapore as we speak using the travel rule.
Thank you, Pelle. Yeah, your surname is definitely a challenge. That's why I didn't even try pronouncing it. Well, thank you all the panelists for your introductions, right? And since the focus of today's discussion is really on Singapore's crypto regulatory landscape, I thought, you know, to paint the picture, if I could invite Julia to, you know, begin the discussion by first talking a little bit about the need for regulation, its goal and purpose, right? This will help provide context for the discussion moving forward. And it'll be great if you can also use that opportunity to perhaps do a quick summary of the PSX requirements and what are the categories of companies that currently fall within.
Thank you, Ian. So, okay, I know that a lot of people right now, especially in the crypto space, is pretty excited about the PSX. Now, in the PSX or anti-money laundering as well as counter-terrorist financing is not new in the traditional FI world. So what I would like to touch upon today, it's really very much to paint a picture as to why the regulators are doing it. And MES, as we know it, is actually one of the most forward-looking regulators in the world, one of the most, I would say, and really has actually put this PSX together. And the PSX, the latest amendment was aligned with the AML, CTF for VAST by FATF. So what does that mean? It's actually to provide the best practices to the industry on what kind of rules and regulations, or rather how we can mitigate the risk of the AML risk in the industry. So, right, so when we talk about why specifically the PSX amendment, so these are the three new categories that have come up to be added into the PSX. Why do they do that? One is to so that MES has the power to also regulate them, to make sure that they can impose certain requirements as far as AML sanctions CFT is concerned. So why are we even doing that? Now, the thing is, virtual asset segment is in its infancy, and there are a lot of things that we are still not clear about. I mean, me typically being in the traditional FI environment or background is that we don't quite clearly understand yet or fully understand the nature and risk of the ecosystem, and which makes it really difficult to regulate. So I would put a caveat there while we are talking about PSX today. There will be a lot of changes going forward in the regulatory environment. So let's just not stop here, but continue to look at why we are doing things that we are doing right now. And so at a macro level, the regulators are responsible, among other things. So in today's context, right, it's actually to ensure stability and integrity of the financial system. And next, they also have the responsibility to protect the vulnerable, the users, the investors. So one of the risks that we need to be really vigilant of is fraud, right? And so on a more global scale, aligning with the FATF as well, is actually to the need to prevent bad actors from making use of our system to launder money or channel funds for terrorist activities through our systems. So it's not so much for the regulator, but it's also about giving confidence to our other stakeholders, for example, the shareholders and our clients, that we are operating in a stable and a clean environment. Over to you, Ian. Do you want to say anything else?
No, thank you, Julia, for giving some context. I think, a lot of people don't realize, they always say, why are regulators in a rush to regulate crypto, right? Are they against crypto? And I think people don't understand that, the law isn't there to regulate crypto. The law is there to protect, right, the people. It's there to regulate money laundering, right? That is the purpose behind the act. And without a doubt, the PS Act has caused waves in the Singapore crypto ecosystem, right? I mean, just last year with the launch of the Payment Services Act license application, we saw over 100 companies, both foreign and domestic, apply for the license, with many more sitting on the sidelines waiting to see how things will play out. And I think the sentiment among the blockchain ecosystem was also mixed. On the one hand, some believe that the regulatory framework creates a safer and more conducive environment, which allows for the entry of institutional players, right? But at the same time, others view it as perhaps increasing the barriers of entry, especially for the smaller crypto players who may not be able to bear the additional cost involved. I mean, in my role with Merkle Science, I tend to agree with both, right? We've definitely seen an increase in institutional interest and activity stemming from the PS Act. But at the same time, we've also had a number of clients who had to pull out because of the increased cost. Now, given your respective work in the space, I'd love to get the panelists' thoughts as to the impact that you've seen the PS Act have on the Singapore crypto industry. And perhaps, Pelle, you could start us off by talking a little bit about how you see the impact having on, let's say, cross-border flows or transfer to unhosted wallets. And on the flip side, will this help open up the rest of the financial sector?
Yeah, sure. Thanks, Ian. What we're seeing is, initially when we started talking with Singaporean companies, we saw a lot of worries, like how are we going to implement these new requirements? Because there are requirements for the travel rule, which we'll get into more detail on, I'm sure, later. And also on how are you supposed to interact with unhosted wallets. And these are things that are changing the way crypto companies operate. So the initial gut reaction, I think, from a lot of companies is, well, we need to stop performing cross-border transactions. And of course, that's a sad development, because that's not what people are in the industry for, is to limiting. But I mean, that was the initial response, I think, from a lot of companies. Now there are solutions like ours and others that can help you actually implement it. And hopefully that means that people are less worried about that aspect now. So I do think the 2 points that you mentioned, Ian, are both very valid. I agree with you on that. Like, I do think that what we're doing by having this framework, we're actually making it easier for both new and existing crypto companies to interact with the traditional financial system. And as someone who's been in the space for many years, this has actually been a bigger issue than the regulators themselves, like, because it's been difficult for people to get banking connections historically in the industry. But this opens it up for that. But at the same time, we really need to also make sure that small startups in the space, and Singapore has plenty of great, innovative small startups, and they need to be able to play in the game as well, and continue to operate on this game.
No, thank you. And Aymeric, you've been in the blockchain space for a long time as well, both with Xfers as part of XSGD and Paxos before that. Well, as part of your work with XSGD, I'm sure you must have engaged with numerous crypto companies, both locally abroad, as well as financial institutions who may be interested in onboarding the XSG, being the first Singapore local stablecoin. Can you share about the impact the PS Act has had with these companies and the conversations that you've been having?
Sure. I think it would be useful to remind some of the milestones that we've went through in the past year. So the PSA came into force in January 2020. Companies in Singapore had until July of 2020 to apply for a DPT license, which is the license for digital payment tokens, or basically providing services related to cryptocurrencies. And since July now, we have a bunch of companies that are applicants, considered applicants, and in the process of getting a license granted. But as of now, in January of 2021 or February of 2021, we haven't seen anyone getting their license yet. Right? And I think what we've seen is, first of all, most players in the space have taken the view of trying to play by the rules. I think when in July of 2020, when the list was made available, there were 192 companies that were applying for a DPT license. Now, this list is regularly updated by the MAS. Last time I checked, we were down to around 80. So it means that there is already 110 companies that have gotten out of the race, either because the requirements were too strict, or whether this was not a space that was attractive enough for them to continue pursuing this license. But I don't think we have seen yet the major impact of this until companies start getting their license. I think if we see that some of the large players in the space don't end up getting their license granted, that's where the landscape is going to change. And we haven't seen that yet because we're still in this process. Right? Now, in terms of the impact that the PSA has had on those companies, we've seen that a lot of them have slowed down their feature release because after July, when they actually put in their application to getting the license with the MAS, there is some, I think companies don't want their product offering to change too much because they have had to go through a very comprehensive description of the business they run and how they run it and the type of features that are available. And so if those features or those products were to change too much, they would have to get back to the MAS, explain the change, and go through this process again. So I think this, for the past 6 or 7 months, has probably slowed down a little bit the growth of this space, at least in Singapore. But at the same time, and I mentioned it in the introduction, we have seen that this new framework published by DMS has been very attractive to international companies that come to Singapore and actually open an office to operate their APAC business from Singapore. So we tend to see it as a short-term pain and hopefully long-term gain, whereby we're going to have a very flourishing ecosystem here in Singapore. By the time these guys also get their license, we're going to see very exciting products and features and use cases that are going to come out of that. Unfortunately, we don't have any update by DMS. If you guys have, I'd be happy to hear. But I think it's still very unclear when those companies or those guys will get their license granted. But hopefully that should come soon.
No, thank you for sharing your views, Aymeric. And I think, I concur. We've in conversation with our clients, we're seeing that this process of applying for the license is taking quite long, right? With some changes coming in, which have led to them having, multiple rounds of interviews with the MAS. But I think on the good thing about it is that we are seeing that MAS is engaging quite a lot with the private sector, taking in the feedback, right? And then regulating appropriately. Well, over to you, Julia. I mean, prior to, moving to JFourth Solutions, you were with Standard Chartered, right? And I know you can't speak on behalf of them, but in your experience over there, what are the bank's views towards crypto, or perhaps crypto and blockchain, right? Has the PS Act allowed them to perhaps change their public stance? For example, I would love your thoughts on the news, for example, that DBS will soon be offering crypto to its clients down the line. And I think more recently, very proud to share that one of our partners, StraitsX, also went public about the partnership that they're working with UOB Kay Hian, right? So have you seen a shift in the Singapore financial institutes?
Yes, there has been a shift. I would say that with the more and more people being more aware of the blockchain and the crypto industry, it does give a lot more comfort for the banks to also participate in this. In fact, Standard Chartered has partnered with a Northern Trust and set up a cryptocurrency custody services named Zodia that's currently still in, it's just been launched recently. And with DBS as well, I felt that, again, back to the story of how MAS has been really proactive is that I think that is really exciting going forward is that DBS partnering with the MAS as well as the Singapore FinTech Association, they have come up with a phased approach to enhance the compliance maturity for fintechs by establishing the FSP compliance readiness framework. So if you go into the Singapore FinTech Association website, if you're a member, you can actually complete the questionnaire that is an online questionnaire to assess your compliance readiness. So you can see that from that perspective, there has been a lot of private public partnership with SFA, with MAS to get this going. And so I would think that there, like I mentioned, that there will be a lot more coming in this space, especially we also have the FATF that provides the guidance on how we should treat them. It's not going to be, it's inevitable that the digital asset sector is going to grow. It's not going to stop.
Thank you. I think, a lot of companies will be very excited to hear that, right? So it seems like regulation is definitely attracting the institutional players to come in, and then touching upon, I think what Aymeric said as well, making Singapore an attractive location for overseas companies. I mean, we've seen the likes of Coinbase, Gemini, right? All setting up operations over here, hiring aggressively. So definitely, I think they see Singapore as being a prominent location in the Asian market, right? Wanting to have a headquarters over here. Well, perhaps switching gears a little bit, right? Let's talk a little bit about the specific requirements under the Payment Services Act and the troubles that companies may have in terms of complying with it, right? So under the Payment Services Act, crypto companies fall under the category of DPT providers, which stands for Digital Payment Token Providers. And under this new framework, these companies have to contend with various new compliance requirements, such as blockchain transaction monitoring, things like what Merkle Science does, as well as I think the more contentious issue is the issue of the travel rule, right? And this has led to many different issues, such as how will companies deal with counterparties in jurisdiction where the travel rule is not yet enforced, issues like, this sunset clause. But before we actually dive into this topic, perhaps, Pelle, you can first begin by giving a brief introduction as to what the travel rule is for the benefit of, members in the audience who may not be familiar with it.
Sure, thanks. Yeah, so the travel rule is really it's a rule that's been around in traditional banking for a long time. In the US, it's been part of where the term the travel rule comes from the US. Law that implemented it back in the 90s, but it's been part of the FATF guidance or FATF recommendation since 2012, 13. I can't remember the specific year, but so banks have implemented it for a long time. And what the travel rule says is that when an institution sends funds on behalf of a customer to another institution, they have to send the customer information along with them. So the originating institution has to send their customer information about their customer and also information about the beneficiary that they have to collect from their customer, send that along to the beneficiary institution. And that's why it's called the travel rule, because the information travels along with the transaction. It's a pretty silly name, but what have you. But this has become a big issue for the crypto world, because our underlying settlement and payment systems like Bitcoin, Ethereum, stable coins do not have a counterparty layer to plug this information into it. In banking, we have SWIFT, and most other payment systems in the traditional world, they have space, there's information about the counterparty that gets transferred along. So it's pretty easy to implement the travel rule there. But in crypto, we don't. So we've had to build this very, very quickly. So the industry has been working on solutions for getting information from one VASP to the other VASP securely. And no, this is not about adding private information on top of a blockchain transaction, which would be maybe the first instinct is how do we actually embed the information in a Bitcoin transaction? But since you cannot delete a Bitcoin transaction, it would be a really bad idea to have private information in there. Also, the transactions are public. So most of the solutions are in a different layer on top of the blockchain, and there are multiple protocols for it. There are some technical protocols like TRP, OpenVASP, Trezor. There are a couple of commercial protocols as well on the market. And but it's been a difficult thing to implement, because if you are in Singapore, for example, where MAS is requiring you to implement it, but your counterparty is in Malaysia, for example, then how do you get the counterparty VASP to actually also implement it? And this is, I think, where the biggest headache of implementing the travel rule is. This is what we call the sunrise problem in the industry. And it has been a difficult thing to do. So we've at Notabene, we've implemented a solution that allows you to interact with VASPs who aren't actively implementing it. But it's an important thing to think about. It's not just, for your jurisdiction. I mean, for Singapore, in many cases, Singapore is the strictest jurisdiction. So in Singapore, you generally have to only worry about the MAS, but all of your counterparties now also have to worry about the MAS and worrying about your rules, because as part of you implementing the travel rule, you have to make a decision. Will you allow transactions to continue to other institutions without implementing the travel rule? And from most of our customers, we're hearing that they're not going to do that. And I believe the MAS are not going to allow them to do that either.
Thank you for that explanation, Pelle. So, I mean, aside from the sunrise problem, in the work that we've seen many other issues, right? Such as, well, not only do you have companies implementing the travel rule at different times, but what if they implement the travel rule with different requirements, right? What if a country says, oh, we only need our local companies to comply with travel rule for transactions above $1,000, and another country says, oh, for us, it's only above $500, right? So if you have a transaction that's in between that range, which law do you follow, right? But I'm curious, to hear from the other panelists. Perhaps Julia, you could do a comparison with how the travel rule compares with, let's say, the SWIFT, right, which is kind of the equivalent, and from Aymeric as well, as a company which actually dealing with crypto players, from an implementation and consideration standpoint, what are some of the challenges that you've seen or your team has experienced in consideration of implementing it? So perhaps Aymeric, we can start with you.
Sure, thanks, Ian. Yeah, maybe I can explain a little bit our travel rule journey, which was mostly around the launch of our stablecoin XSGD. Again, I'd like to get back to what the situation was back in 2019 and at the beginning of 2020. At the time, actually, the focus of the industry was not on the travel rule yet. It was the main challenge for us to launch was more the taxonomy of whether a stablecoin would be considered a debenture, is it a security, is it a digital payment token? And so with the Payment Services Act, we finally got more clarity around what stablecoins are and how they should be regulated. And this framework is called by the MAS the e-money framework, which means that for a token pegged to a national currency, such as a stablecoin, this fall under the e-money category, which makes it, in terms of regulatory requirement, regulated under the PSN01 guideline as opposed to PSN02 guideline for DPT. So this is a bit technical. I'm not going to go too much into those details, but what is important to understand is when it comes to travel rule, actually the requirements are the same, whatever you are, e-money or a digital payment token. And so we with this taxonomy out of the way and the regulatory framework we need to follow out of the way, we had to face this new challenge called the travel rule, and that the industry as a whole, I think, was not ready to tackle. So from our perspective, we identified that in Singapore actually was implemented in a way whereby there are two different categories. There is a travel rule implementation that concerns only domestic transactions, and a travel rule that concerns cross-border or overseas transaction. And we figured out that with since we've talked to a lot of people in the industry, Notabene being one, and a few other companies that are attempting to fix these issues for actors like us. And at the time, back in June or July, our assessment was that there was not, let's say, a ready solution that would enable us to actually comply for cross-border transactions. There were a lot of solutions that would be good for tomorrow, but there was nothing ready for today, right? And so we've decided to go live with ring-fencing our transactions to domestic. And when it comes to travel rule, the exchange of information actually requires to building communication channel if you don't have a technology solution to support that, right? So this is what we did. We built actually communication channels domestically with all our different counterparties. This was painful because there was not the same appetite by the different stakeholders in this system to dedicate resource to building those communication channels. So we have some that are very, that are very good, very automated, and that enables us to process transaction very quickly and frictionlessly. But we also have counterpart for which there is exchange of emails and all this stuff. And obviously this is less than ideal, right? And so we are happy that now in 2021, as we intend to increase the scope of our stablecoin to open it up to cross-border transactions, we see that there is tremendous progress being made in this space. Some of the latest solutions that are available, notably with Notabene, tend to solve part of the problem. And this is what we are in the process of working on to integrate potentially with Notabene or some other solution so that we can enable those cross-border transactions starting hopefully in the first half of this year.
No, thank you, Aymeric, for sharing that. I think members in the audience who are struggling with this issue would probably learn a lot. So one of the suggestions, I guess, in the interim would be to ring fence and then find alternative communication channels, right? So I think the challenge with the travel rule is that you're expecting companies all over the world to exchange information in a manner without a single organization, running and structuring. So, with the SWIFT, we have the SWIFT Foundation, right? Which is an independent international body who can come up with the standards and dictate and give, advice into how this information can be transacted. But in the crypto space, unfortunately, we don't have the same, right? So over to you, Julia. Would love to get your thoughts on, how the travel rule and its counterpart in the traditional sense, SWIFT, how they are different, right? As well as, these are not issues that are specific to Singapore. Countries globally are also struggling to tackle this. And perhaps we can also tap into some of the expertise of some global associations like the GDF, where you're an active contributor. So perhaps you can also share some of the best practices that the GDF have come up with.
Right, thanks, Ian. So yeah, comparing to what the traditional banking environment has, there's the SWIFT, which is an international organization, as mentioned by Aymeric. They had to set up a communication platform that is common so that each of the service providers are able to share the same language, especially in exchanging information that is so critical, like the originator and the beneficiary information, which is critical as far as transaction monitoring and screening is concerned. So I believe that probably in the near future, hopefully, that there will be a more global kind of platform that could be in place, something similar to the SWIFT that could work to that advantage to allow for more cross-border transactions to happen. So speaking of GDF, GDF, or we call it Global Digital Finance, is actually a forum that promotes the adoption of best practices for crypto assets and digital finance technologies through the development of conduct standards in a shared forum with market participants, with policymakers, as well as with regulators. So there's a lot of dialogue. So it's like we consider the P2P dialogue, the private with the public dialogue that is happening in the GDF space as well. I said in the I'm together with Pelle, actually part of a working group currently working on best practices guidance for WASP, arising from the issuance of the FATF standards for virtual assets as well as virtual assets service providers. So in progress, there are two development of two questionnaires. The first one is a questionnaire that is very much based on the Wolfberg questionnaire that is used by the banks for correspondent banking relationship, where with the primary objective to standardize the VASP to bank FI typically onboarding and to aid the banks in to be able to assess the real risk on onboarding VASP. So typically, while we say that we are going to have all these cryptocurrency, the reality is currently there is still there are not many people who would be able to accept the cryptocurrencies, and so there will still need to be fiat currencies that need to be exchanged, right? So therefore, there would, as far as the virtual assets service providers are concerned, they will still need to work with the traditional banks in order to convert these fiat currencies for their day-to-day operations purpose. So so that's one. And the next one is actually, interestingly, Pelle was, and Aymeric were mentioning about the travel rule. There's a second questionnaire that is currently being developed as well. So watch this space, where we are talking about the standardizing the WASP to VASP relationship. And it's becoming clear that, VASP do not share their customer data with unknown counterparties, right? And so this questionnaire, it aims to provide a baseline to allow the VASP to understand and assess their counterparty. So I think with that development, hopefully, it will smoothen the communication process between the service providers. And I think on that part also, it would be remiss of me or to not also acknowledge the two other important guidelines that MES have set out. And this actually, I'm referring to is the individual accountability and conduct IAC guidelines, as well as the technology risk management guidelines. So in the IAC, it actually sets out the measures that FI should put in place to promote the individual accountability of senior managers. And it actually means tone from the top in terms of the proper conduct among all employees. So that is actually to set the tone from the top, the compliance culture. And the MES technology risk management guidelines sets out the risk management principles and best practice for the financial sector. So back to you, Ian.
No, thank you, Julia, for sharing about the work that GDF is doing, as well as bringing our attention to the IAC. All right, so again, the GDF is a global association that brings together both the private and public sector to come and try to come up with best practices, right, in terms of managing AML risk, as well as the implementation of the travel rule. So for members of the audience who would like to engage with a wider network, do take a look at the GDF. All right, now I'm just conscious of the time. We have a couple of questions that have come in, right, which we'll turn over to that shortly. If anybody else has any questions, please take this opportunity, put it down in the chat. But before we dive into that, I just have one or two more questions for the panel. So I think my first question would be, one of my last questions to the panel would be on the topic of CBDCs. Presumably, right? So for those of you who are unfamiliar with the term, CBDC stands for Central Bank Digital Currency. Now, Singapore, I think as a jurisdiction, is one of the first to actually explore the use of blockchain and DLT to tokenize the Singapore dollar, right? With Project Ubin a couple of years ago, this was already explored. And, question that I always get from clients is, well, are stable coins e-money or DPT? And I think as Aymeric alluded to previously, XSGD is seen to be an e-money. But at the same time, I do know of some stable coins which could be considered DPT. So perhaps, Aymeric, it would be great if you can, I mean, you don't have to go into too much of the technicalities, but perhaps you could shed some light for the audience as to why are some stablecoins categorized as e-money and DPT? And more importantly, how does this sit in the Singapore regulatory landscape?
Right. So some of the criteria for a token to be considered e-money are pegged to a national currency. So that applies to many stablecoins. Another one is, does the token represent a claim of the issuer? And a third one is needs to be backed by the the same amount of fiat currency in a segregated account, right, as a reserve. And so some of the stable coins out there are following this design, but some don't, right? One, I think, a prominent one that could be a counterexample to a stable coin being e-money would be DAI, right? So DAI is a digital autonomous organization, and the stablecoin is backed by Ethereum as opposed to US dollar, although the token is denominated in US dollar, right? And so for such stablecoin, it is much more difficult to argue that this token would be e-money because does it represent a claim on the issuer? The governance of the company that issues it puts this into question already. And a second thing is it backed by the corresponding amount of fiat? Well, it is not, because it is backed by a cryptocurrency, right? So I think we have this clarity of XSGD being e-money, DAI being a DPT. And then between the two, we have a range of stable coins that could fall in either category depending on the design, right? And so for those stable coins that fall in between the two, some projects are trying to fall into the e-money category, and they are working with their legal counsel to or adjust the design so that they could qualify for that. And some of them are arguing that they should be DPT, and so they're also working with lawyers to get their token regarded as such. I think we are not yet at the point where there is full clarity. I think the MAS is also working on that. But obviously, being e-money is, I think, both an opportunity and a challenge. An opportunity because we have the clarity of the framework we need to comply with as an issuer. And so that represents an opportunity because we've been the first one to be able to launch a Singapore dollar-backed stablecoin under that framework. But it's also a challenge because a lot of the application in the space that are using stablecoins as a settlement product, and I'm thinking specifically about yield product, then suddenly if the token is e-money, potentially that exposes them to needing to comply with so many other regulatory framework. Because e-money being regarded as money, suddenly if you offer interest rate on e-money, then, and you're not a bank, then that raises many questions, right? So that's why also we see stablecoin issuers that are trying to get their token, even though they have most of the characteristics of e-money to fall under the DPT, so they can enable more use cases and more applications, and that would not fall into those very strict regulatory frameworks. Hope that answered the questions.
Yes, thank you, Aymeric. I think that's helped clarify. So, I mean, I always find it very interesting, right, that, you know, all stablecoins unregulated the same, that the technology behind it can actually cause it to be classified in one camp versus the other. Now, before we turn over to the question from the audience, I just have one final question to the panel, and perhaps we can start with you, Pelle. And so the question I have is, how can companies turn compliance into a growth opportunity in this increasingly competitive market, right? I think it's, you know, compliance software solution providers. Yeah, we'd love to get your take on this.
Sure. No, this is something that I'm quite passionate about. Is that, you know, compliance isn't just about, you know, stopping business. In the crypto world, we have this idea that, oh, compliance is this terrible thing that we have to do and we can't do business with it. But I actually think there's a lot of things that complying with these rules allows us to start doing. So for example, with the travel rule, we actually now have a layer for on top of transactions with counterparty information. And this is useful information. And someone who's been working with Bitcoin for 9+ years, it's very difficult to see what's behind a Bitcoin address, for example. But starting to give companies new tools to create better products is like one of the outcomes of this, because the travel rule allows us to do this, to allow Bitcoin and Ethereum and stablecoin transactions to look like people are used to. So I can send, if I'm sending funds to my mom, I know I'm sending funds to my mom because she is the counterparty on it, and I can trust that it's going there. As I mentioned, I've been in the space for a long time. I'm still nervous every single time I go to a withdrawal screen in a crypto exchange or to my wallet to send funds out of my wallet. I double check the address. I'm so paranoid about it. Am I messing up? And I go in and check that the explorers, blockchain explorers afterwards to make sure that the transaction actually went through. But there's always this scary part of it. And I'm someone who's been in the space since the very beginning. And so I can only imagine, what it feels like for regular customers. And I think like the travel rule, also blockchain analytics, it gives us a bunch of new tools. And we shouldn't just look at it as we're using these tools to comply with the law. We should start looking at it creatively for how can we start building new products? For example, having a counterparty layer means that it's much easier to do payroll, for example. There are many different kinds of applications, e-commerce, etc., where you need a counterparty layer, and it's not the MAS that's telling you. It's your customer saying that we need this before we can use it for these applications. So I think once we get over this initial panic that we have to implement it, we're going to see a renaissance of new exciting products and applications for the industry. And I think Singapore being on the forefront of it and having so many fantastic startups in this space and companies in this space, I think it's going to be really exciting to see what comes out of Singapore over the next year or two.
Thank you, Pelle. I totally concur. I think, really with the amount of data that's available with the blockchain, not only can you build all these compliance systems, but the analytics that you can do is so much more, right? In terms of what we've seen, clients coming to us and say, actually, we want to use your compliance system to help us with business analytics, right? Tracking where are my clients sending their money from? Perhaps I want to do a partnership with that company, right? We're also seeing, companies which are more compliant, finding it easier to open bank accounts, onboarding payment systems, right? So I think, it's really having to shift the mindset that compliance is a cost into something that, how can I leverage this to help my business grow, right? And so with that, I'd like to, dedicate the rest of the time that we have left to questions from the audience, right? So perhaps we can start with the one that's in the Q&A. So we have a question from Joseph. To what extent will the PSNO2 be affected by the amendment of the PSF? Given the nature of the question, I believe this should be directed to Julia.
Thanks so much for the question, Joseph. A good one. I will have got to start by saying that compliance is not just about ticking the box. Compliance is a culture, right? And so let's go back to the basics. What are we looking at? It's not going to be about the law. That one is going to change. There will be a lot of, it's going to evolve over time. So at the end of the day, what are we looking for? The things that will still remain would be your client due diligence, periodic review, onboarding review, trigger events. Then you will have your transaction monitoring, and as well as transaction and name screening. So this is where we need to be, how do I say it, to be clever in the way that we implement it. It will have to be a risk-based approach. And one of the things that I would like to draw attention to is that transaction monitoring, given that we don't have the equivalent of SWIFT in this space at the moment, one of the things that I was advocating is actually a blockchain analytics. But again, of course, this is on a risk-based approach. It depends on the nature of the business that you are in, where for that, the transaction monitoring is probably going to be replaced by the blockchain analysis. So I hope that answers your question, Joseph. It's not going to change, except that the tools might differ.
Anybody else? Yeah. Any other panelists would like to add on to that? Okay. If not, then let's jump to the next question over here. So we have a question from, I believe, Clarence. What are the current industry solutions for complying with VASP travel rule and interacting with non-hosted wallets? I believe this would be a question for Pelle.
Yeah, thanks. So there are many different industry designed protocols for solving the travel rule. As I mentioned before, there's OpenVASP, there's TRP, there's TRISA. And most people have been looking at those, but they only really solve a small part of the problem, because it's not just about sending a transaction. It's about figuring out what kind of transaction is this. Is it an unhosted wallet? Is it a travel rule? If it is a travel rule, do I need to ask more information from my customers? And if it's an unhosted wallet, do I now need to prove that they own this wallet? And then how does this fit in? How do I perform due diligence on my counterparty exchange? How do I find the right protocol to do it? This is what we do at Notabene. We have the industry's only full, complete solution that takes into account all of these aspects, from when the customer starts initiating the transaction and processing it through your own risk platform, your own due diligence, your own rules, sending it to the counterparty, and then letting them take it from there. And so you can build things using the protocols, but you have to do a lot of work on your side if you want to do that. On the non-custodial solutions, there, MAS, what we hear from our customers is that the MAS has been asking, really been requiring this. So you need to handle unhosted wallets. And unhosted wallets are wallets that are not held by an exchange. It's a crypto wallet, essentially, that's held by a customer. So you will need to be able to prove that they own a particular wallet to be able to interact with them. And we've tied our solution for doing that directly into our product, because it's also important to know, is this a travel rule transaction or isn't it? Is it it's an unhosted wallet? So it's kind of like binary, one or the other. And then you have to figure out how to handle it. But yeah, you can interact with us, you can contact us, and we can help you solve this very quickly.
If I can just chip in on this question of an unhosted wallet, I think this one is a key one, and we see a lot of pushback happening from the industry in the US, but also in different jurisdictions. And I think this one is important because the analogy is that would be putting in requirements on a personal wallet in the same way that you can have your wallet in your pocket. And then in the real world, you would need to exchange information to get coins or banknotes into that wallet when the baker, give you back the change, right? And if you apply that to crypto, or you apply this travel rule into the real world, you realize that this doesn't make sense. And so I really hope that regulators will understand that there should be rules in place and strict rules in place when it comes to VASP transactions. But I don't think realistically this could extend to personal transaction into unhosted wallet, because that goes into really like what people can do with their money and the freedom that comes with it, right?
No, thank you for sharing that, Aymeric, and I agree. As good as regulation is, you don't want to take it too far, right? It starts intruding into people's freedom, people's decision, how they want to spend money. Obviously, we need to be aware of the risk involved, but there should be better ways in order to manage it than imposing, restrictions to how people spend it in such manner. Now, we are running a little bit short of time, so I'm just going to take one last question from the audience. That's not to say that, for those of you who have posted questions, you will not get an answer. After the webinar today, we will be circulating an email to all the attendees with the contact details of the panelists. So of course, for the questions that remain unanswered, do feel free to, shoot them a message directly, and I'm sure they'll be happy to get on a call with you one-on-one and dive deep into your question. But the last question that I have over here that has come in, and I'm not sure if, the panelists will be able to answer this, but the question is, you mentioned that MAS are having extensive interviews with license applicants. What do MAS examine in these interviews? Okay, so I believe I'm the one that mentioned that, but I'd like to give the panelists an opportunity. Any of you have gone through the interviews yourselves? No? No? Okay. In that case, I'm happy to share what I've heard. So again, I do want to clarify that I've not gone through the interview myself, but all our local clients in Singapore, as well as those overseas looking to apply, have gone through it. And based on what they've shared with me, the interviews cover a range of different issues, right? Initial interviews will be really trying to understand the business, right? There will be an interview session with your compliance officer where they'll do a deep dive into how well does your compliance officer understand the regulatory requirements, what are the processes in place that they have to mitigate against these risks. And of course, a lot of the latest conversations are around travel rule, right? How are you as a company looking to comply with the travel rule? What are the solutions that you're using, and issues around PRM, right? Technology risk management, right? But with that, right, as I mentioned, we are coming up on the time. So I guess the last question that I have to the panel, so this is to everyone, is what do you think is next for the regulators, right? Will there be an additional crackdown on unhosted wallows? Do you think we'll see another expansion of the Payment Services Act? What do you think the focus is on in 2021?
I would say, I would like to say decentralized finance, but not from the perspective of an hosted wallet, but more from the perspective of the platforms that enables those exchanges and how those should be regulated. I think is a very challenging topic to address for regulators today.
I think given the arrest of the lady who had done some crypto asset transactions unlicensed, so I believe that there would also be a more stringent look into the transaction monitoring side, especially in identifying the bad actors that are making use of innocent individuals or rather ignorant individuals in doing those transactions. So I believe that there will also going to be a lot more education in this space from the regulators.
Yeah, I just want to also agree with Aymeric that what we're hearing most is DeFi. DeFi is the big topic amongst FATF, amongst regulators worldwide, and I think in many cases they're trying to understand it right now, and I think the industry also needs to help explain itself and help be part of the conversations. That's a very important part of it. And many parts of the industry are taking an active role talking with regulators, but there's also unfortunately a lot of loud people on Twitter, those kinds of places also, who are taking a very anti-regulatory stance for it, which I think is a little bit of a shame, because I actually think DeFi has a really, really important place in the future, particularly, and it presents many opportunities for regulated businesses if we can find ways for regulated businesses to work with them in a safe manner. And I do think that's possible. But I think this is where we're going to see a lot over the next year. A lot of excitement and a lot of back and forth, a lot of pushback, lots of threats, lots of solutions. And I think by next year, it'll be a lot clearer.
Thank you, Pelle. I totally agree. I think, this year we're going to see a lot of focus on the DeFi side, especially since the last couple of months, there's been so much interest, so much money flowing to these platforms that regulators no longer have a choice, right? They need to take a closer look at it. They need to address the money laundering risk, and they need to come up with frameworks to prevent people from taking advantage of these platforms, right? So with that, we've come to the end of today's webinar. Thank you to all the attendees who have attended, as well as to, my distinguished panelists, right? So for those of you in the audience, if you need help with your travel risk solutions, you know to go to Pelle from Notabene. If you need help with, setting up your compliance frameworks, license applications, you have Julia. And of course, if you're looking to onboard a local stablecoin, if you want to give your clients the ability to, transact with a Singapore stablecoin, please hit up Aymeric from XSGD Xfers, right? And again, the contact details of all the panelists will be sent to you in an email after today's session. So thank you everyone for attending, and I hope you have a wonderful rest of the day.
Thank you, everyone.
Guys. Thank you, Yan.